Hi, I'm Clare Sieg. I'm a partner at Revolution Ventures, where we focus on early stage investing in leading technology companies. So at Revolution, we focus on investing in companies outside of venture capital hotbeds. So San Francisco, New York, Boston, they're incredible markets, but there's no reason that 2/3 of venture capital needs to flow to only 3 places in the US, when 85% of Fortune 500 companies are based outside of those areas. We think there's a huge capital gap, and we don't think that there's a talent gap associated with that. We see communities that have really strong university systems creating new talent, incumbent, big Fortune 500 companies retaining that talent, and seed stage and accelerator groups like Centrifuge that are helping companies get off the ground. I think Cincinnati has a lot of the tenets of things that we look for in communities that are scaling rapidly and that have a lot of opportunity for startups. You guys have great talent. You have big Fortune 500 companies that are really invested in innovation and in both building and buying, which is critically important. And I think you also have a great sense of community around here, a restaurant scene, professional sports leagues. It's a place that people actually want to live. The cost of scaling a company in Cincinnati is lower than most other places. The cost of living is lower, so employees have lower expectations around salaries. And it's not as competitive of a labor market, so the retention rates are much higher. Scaling the business is just fundamentally cheaper because of those dynamics. And you're in better proximity to a lot of the partnerships that you'd want to be striking because of the P&Gs of the world that are headquartered here. And groups like that have big innovation arms and know that they need to reinvent parts of their business model, where you have a ton of legacy talent that understands speaking to consumers, building out marketing, and how supply chain works, gives this ecosystem a fighting edge. Our biggest advice to larger Fortune 500 companies that want to start partnering in more deep ways with startups and getting some of those learnings from an innovation curve is make it easier. And also make it a key priority, because fighting through a lot of red tape to get a small partnership isn't really worth the while of a startup, but being aligned in terms of outcomes can be. Hiring is always going to be the lifeblood of your company, so focusing on that and getting ahead of it and focusing on a diverse culture that really brings talent from all different sides of it so that you can be innovative in that vein is critically important. The other piece of it is planning your cash needs. So we've heard of a lot of companies going out of business because they run out of cash, but nobody has ever gone out of business because of dilution. And really prioritizing bringing the right partners around to the table to help scale your business over the long run versus focusing on dilution from day one is really important. Usually when there's a real focus, there is a higher likelihood that there have been bigger outcomes in that space, and big outcomes mean that you have capital gains in the area with people who are more risk-loving, who tend to be angels and startup-minded, who go back and start new companies. And so that creates a bit more of a flywheel. And I think that focus and single-mindedness in terms of industry that a group is attacking is helpful in that regard. And I also think it's easier for investors who rely on pattern recognition when they're looking at Series A, Series B companies. You look at Pittsburgh, for example, where they had a lot of the same core tenets, and they continue to have a lot of the same core tenets that a Cincinnati has in terms of large incumbent companies that retain talent, a really impressive university system that creates new talent and technology every year, and an aggressive seed stage and angel and incubator level that helps spur that talent along. They've done a really good job in robotics and AI and proven themselves out in that way and attracted a lot of capital because of it. And I think Cincinnati can absolutely do that if you focus on the core tenets of what this community knows and knows better than any other community: supply chain, logistics, building consumer brands, and also fintech and insurance. Centrifuge has been hugely helpful for us in terms of covering the Ohio market. It's a large ecosystem. It's one where you have a lot of emerging entrepreneurs, but really having boots on the ground is the fastest and best way to be able to distinguish signal from noise. The other core component that Centrifuge brings to the table is the connectivity with strategic partnerships for our portfolio companies. And they do it in a unique way that isn't shooting in the dark, not knowing who to talk to. They put you in touch with the right person at the right time. And so they cut through a lot of the red tape that's historically been associated with partnering with a strategic for an early stage company.